Hello, everyone. Good morning.
Good morning, sir.
How are you, everyone?
I'm good. How are you?
Bye. Right. So, they will find us on the way. Don't worry about them. They will find us on the way. Um, I wanted to say, we have started with our revision classes. So, yeah, I think I sent the question papers that we are likely to do in our revision class. So what we'll do is we will focus on, for now, I just introduced this costing. Remember the MAC 3701, it contains costing on. So I want us to see or to improve our costing understanding so that when we go to the other question papers, at least we have a hint of costing. So once you have a hint of this costing, then it means now when you approach the other question papers, then you find that it is going to be easy for you to see what is needed there, right? So let's start with, I think we'll do question 1, part A and B for today. Then you will see on Wednesday if we can be able to finish the other parts. Right, so let's start with the question that is here. Here is the company information for the question. They say Soy Free Limited process soybeans and produces related product as is at its plant near Frankfurt, Free State. Soy Free is a divisional structure. I think the moment you read this, you know which topic are they referring to when they talk of a divisional structure. You are now looking at performance management, and they say it consists of a head office and two divisions, namely the processing and plant-based food processing. So these are the two divisions that we have, the processing and the plant-based food division. Each division is an independent management that controls all the aspects of their respective division. Here, if they bring in performance management topic questions, then you know you are dealing with controllable cost, controllable investment. So what I would advise you guys like now, understand the principles, costing principles, so that when you are reading a question, you can be able to relate each and every item that you come across to a specific principle. That's the only way you can be able to answer questions in the exam. Be able to relate each and every whatever you are reading to a specific principle. Then you know if it is performance management, and like here they are talking of the divisions that control all the aspects of their respective division. Then when you measure their performance, now you are going to base on controllable cost. So I would prefer us to understand all the costing topics. Remember in our MAC 3761, they will not test us for all the topics for costing, but we don't know which ones will come. They can choose any topic which they feel they want to examine that one. So understanding all the costing principles is very important, especially in the final exam. That's the reason why sometimes those who have been with us even last year, you'll find that our first revision class will start with Mac 3701 question paper. The reason I do that is I know that in Mac 3701, they cover a lot of costing topics. But if we start to focus on question paper for Mac 3761, you will find that we will not do some of the costing topics because they are not there in the question paper. So if we cover them here now on 3701, then it means when we go to our 3761 question paper, you already have a very good background of costing. Then you can be able to apply it in any question, in whichever way the question is asked. Right, then here they say both divisions use the absorption costing system, and the value of their inventory using the first in, first out method. I think we understand when we say we value our inventory using the first in, first out method. We here, the only difference between the weighted average and the first in, first out method is when you value your closing inventory. If you are using FIFO, you don't include opening inventory into the cost of the inventory. That's the only difference, which means this FIFO is only there when you value your closing inventory, right? And here we should understand the difference between absorption costing and direct costing. Those are very basic principles that we should all understand, right? Then I want us to look at the question that we are required to do before we read much. So our question is, prepare PD's actual statement of profit or loss and other comprehensive income for the month ended 30 September 2024. So here we are required to prepare the actual. If they say actual, it means you are going to look for actual information. If they say budgeted, it means you have to look for budgeted information. That's another key area that we should be careful of when we are answering our question. Because if they say actual, it means all the information that we are going to look for is actual information. Because in a question paper, they will give you budgeted information and actual information. So here we should be careful of the wording of the question. Because sometimes you end up using the actual information, whereas the question requires you to use the budgeted information, right? So which means our first question, it requires us to prepare the actual statement of profit or loss. And also when you are preparing your actual statement, remember they are using absorption costing. They are using absorption costing, which means all fixed costs, manufacturing costs, are going to be part of the cost of the product, right? So which means we are focusing on PD. The reason why I wanted us to read the question is we are focusing on PD's action. So which means for now, we don't need to read on the plant-based food division because the question that we want to answer is for PD. So there is no need for you to waste time in the exam reading about the plant-based food division. You just focus on the processing division because this is what we want to answer. So let's see what they say about the processing division. They say the processing division plant is the capacity to process 7,500 tons of soybeans per month into three separately identifiable products, namely soybean oil, that's the S oil, and the soya meal, the S meal, and the soybean hulls. So we have three products here. Then they say the oil and the meal are the joint product. Automatically, here, it means you are focusing on byproduct, joint processing, and byproducts. So which means this is the topic that we are focusing on here. They are talking of joint products, which means we are focusing on byproduct and uh, joint processing and byproduct. That's the topic that we are focusing on here. So our joint products is the oil and the milk. So which means the whole is a byproduct, right? While the wholes are a byproduct, joint costs are allocated based on sales values at the split of point method. Here you must know all the allocation basis for joint cost to joint product. We have the net realizable value, we have the quantity, we have the gross profit, we have this one, this sales value at the split off point. Understand all those methods, because what you should do, like when you are doing your revision, let's say you are going through this question is by product costing. What you should do when you are doing a question like this, don't end on this question. Also go to the notes and the textbook so that you can also add something which is not here on the question. When you are revising each and every question, go also to your notes and textbook and also see what else is there on this topic, so that you don't just focus on the question that was asked. Because remember, the questions will be asked in a different way. So when you are revising, make sure you look at the topic. Here we're dealing with joint product costing. So which means you can also go to the notes and the textbook on this topic and see, like here, they are talking of, they are using the sales value at the split off point to allocate joint cost, which means you should also go um, to the notes or the textbook and check which other methods are there. Then you understand every method. Because tomorrow when the exam comes, you will not find the split off point. So don't just understand the split off point, only understand all the methods, right? Then they say soybeans are delivered to the plant where it is stored in silos until needed for processing. The soybean processing begins by removing metal and impurities from the soya beans, where after the soya beans hull is separated from the bean. The dehulled bean is crushed, ground, and compressed into the oil and milk. So that's the information about the processing division. So let's look about that actual information. Remember, we're looking at the actual information. So here is our PD actual results for the month of September, the actual result. So number one said there was no opening and closing inventory of any type. We don't have opening or closing inventory. Then number 1.2 says 7,000 tons of soybeans were processed at the plant, and the actual yield from these tons were 75 S meal, 18% S oil, and 7% of the house. So this is our quantities at split off point. So which means you should have this as your quantities at split off point. Then they say on number 1.3, the soybeans were purchased at 7,300 per ton. Then they say, so which means the soybeans cost 7,300 per ton, and they are 7,000 tons. So 7,000 times 7,300 per ton. That's the cost of the soybeans that were put into the process. What you should look, guys, here is we're doing joint and byproduct costing. Right, in a joint and byproduct costing, what I want you guys to look at when you are answering question, the first thing that you look at is the joint cost. Who are the joint costs in the question? So your joint costs are going to be made up of manufacturing cost and what else will make our joint cost here? Before the split off point, because remember this is a process, which means the rest of the manufacturing costs are going to be so here we're looking at the raw materials that were fed into the process. What else do we have to look at which will make up the joint cost? We have raw materials, labor, am I correct? And what else do we have that make up the manufacturing cost? We have also what? Overheads. Right. So if the question did not give you the amount of the joint cost, it means you should calculate your joint cost. Remember, in a joint and byproduct processing, it's a process costing. So during the process, you don't know which products are going to be, at what quantities are they going to be at the split off point. So which means you need to allocate joint cost at split off point. So which means you must have your joint cost here. So your joint cost in the process is going to be made up of raw material, overheads, and labor. So which means in here, when you are determining the joint cost to be allocated to the joint product, you must look at all manufacturing costs. Those are the joint costs to be allocated to the joint products. All manufacturing costs, raw materials.
Sorry, sir.
Yes.
I just wanted to ask about the joint cost. Is it the same as convention cost, or there are two different things? Convention cost and then the joint cost.
Okay, conversion cost here. Remember, we have we have labor. Is the. If you want to put it that way, it means your labor and your overheads are going to be the conversion cost. Then your raw materials is now going to be the material that was put into the product, because conversion cost is going to be labor and overheads. But you should also include your raw materials again. I don't know if you get this or the sense of what I'm trying. If you check in your, sometimes if you check in our notes, we have where we say conversion cost, then we put our labor and overheads. Those are part of the conversion cost. Then the material is going to be this raw material. I don't know if it is clear.
Okay,
So
no, I get you. Thank you.
This is very important when you are answering your questions. What are those? What makes up those joint costs? Because in a question like this one, when I was going through it, they did not give us a specific figure for joint cost. We need to calculate the joint cost. So you should know what makes up the joint cost, which means the joint cost is what the cost of the process. Those are the joint costs. And those costs are the ones that we are going to allocate to joint products at split off point. Right, so that's there. So that's number one. Then, okay, while we are reading, let's also try to see who are the joint costs. I think number 1.3 is a joint cost. Am I correct? Then the delivery and silo holding cost of the soybeans were 160 per ton. This one also goes to joint cost. Am I correct? Yeah, it goes to joint cost. Then they say the soybeans are processed in batches of 35 tons per batch. The electricity required per batch is 168 kilowatt hours for 250 cents per kilowatt. So this one is also going to be a joint cost. So when you are building up your joint cost, you should take all this into account. Then other variable manufacturing costs, excluding electricity, were 100 per batch. It's also a joint cost. Remember, we will only allocate them at split off point. So which means at the meantime, we need to have a figure for joint cost. So this is going to be a joint cost again. Then the standard direct labor rate was 150 per clock hour, but after salary negotiations, the actual rate for September was 4% higher than the budgeted rate. September's actual direct labor hours. So this is also a joint cost. Because when you come here, anything that is raw material, anything that is labor, anything that is overheads is going to form the joint cost. So that's how you identify your joint cost here. And then 1.8 says fixed manufacturing overheads. They are manufacturing overheads, which means they are also going to be part of the joint cost, 33,000 for the month. So number 1.3 to 1.8 are all your joint costs that will be allocated to the joint product. Then number 1.9, the house are dried at 0.75 per kg and packaged at 1 rand per kg before being sold at 425 per kg. What is going to be this? Remember, the how is the byproduct. What do we do with the byproduct here when we are allocating joint cost to joint products? Anyone with an idea? What are we going to do with the byproduct?
I think we gonna use that one when we do the net realizing value of the hulls.
When we
Then
want
when we calculate the net realizing value, and then we're gonna deduct that to the joint cost.
Yeah. So which means, remember, if you go to our notes, they will tell you that a byproduct, the net realizable value of a byproduct is going to reduce the joint costs that are to be allocated to joint products. So which means here 1.9 is going to assist us to calculate the net realizable value of the byproduct. Then when we get that net realizable value of the byproduct, then we subtract it from the joint cost that we have calculated from 1.2 to 1.8. Then what is left now are going to be the joint costs to be allocated to the joint products using the sales value at split off point. So which means now we want the selling price at split off point. This is for the S mill. So we already have our selling price of S mill at split off point. Then 1.11 now says S mill's distribution is outsourced to wheel distributors. The contract consists of fixed costs, and the moment you read and you see something like this, what should come to your mind is we have fixed cost and variable cost in here. Remember, this is the total distribution cost. So which means there is a fixed and a variable cost element in here. How do we split it? So which means this is where your high-low method comes. So which means here you are going to use your high-low method to split the variable cost element and the fixed cost element. So you are going to use your high-low method on 1.11 so that you can be able to calculate the distribution cost of S mill. Right? So that's there. Then 1.3, it says 1.12, it says soil is further refined to improve the flavor and odor of the oil at a cost of, that's the further processing cost of S oil. Then the refining process does not change the weight. The selling price per ton of the refined oil was 8,750 per ton, and the related distribution costs were 1.5% of the sales price. So here we're going to get our further processing cost of S oil, and also this is the selling price after being further processed. So which means when we look at the sales value of S oil in our calculation, we take this because this one is going to be sold after being further processed, right? Then the selling price of the unrefined oil at the split off point is 8,600. So this is the sales value of S oil at split off point. Here you should be careful. This one is at split off point, and this one is after further processing. So when you allocate your joint cost, it means you are going to use this price for the S oil, because they say you allocate joint cost using the sales value at split off point. So you are going to use this 8,600. Then the fixed administrative costs of 360,000 were allocated equally between the joint product. So here we should know that administrative costs are not going to be part of the joint cost because they are not manufacturing. They are not manufacturing, so they are not going to be part of the joint cost. So 1.14 is going to be an overhead cost. Right, so we are done. So when you are done reading, remember you were jotting out. When you are reading, you should be jotting out your story there. So what we should now look at is we want to do the actual statement of profit and loss. Okay. So they say we must have a column for total and a column for the products. So this is going to be S meal. We can have the other one is S oil. Then we can have our total, right? So when you are answering your question, you need the actual statement of profit and loss, and you must know that you are also taking into account joint byproduct and joint cost and byproduct. So which means the first thing that you have is going to be your sales, then you less what are we going to less there? We are
Variable
going to
cost.
less,
Is it?
sorry?
No, I was saying, is it a variable cost or manufacturing cost of sales? I'm not sure.
Okay, you can less here. Was this one is going to include our, so here we can less, here we are going to less a few things. There's further processing cost and distribution cost. And so in our first, we can less joint cost. less the joint cost to be allocated to joint products. So which means here we have to calculate our joint cost. After our joint cost, then we are also going to less further processing cost, processing. When you less further processing costs, what else are we going to less? There is distribution cost. We also have to less distribution cost. And what else do we have to less? We also have to, we also talk about what refining cost. Remember here we're dealing with this one in the context of joint and byproduct costing. That's another thing that we should be careful of when we are answering this question. Then what else do we have? We have, because remember here we want the profit. So what else do we have to arrive to the profit? And we are using the absorption costing. Then we have admin cost. Right after admin cost, what else is going to be our cost from the question? Let's just come here and say profit for the profit. So we're going to have profit before tax. Right, then from there, you can now do your calculations. You can do it the way you want. You can just start by the calculation. But myself, I always prefer to start with this structure first before I do the calculation. Then when I'm doing, I'll first identify from the question what will go to my actual statement. Then after that, then I will now say, I'll do the calculation for everyone here. Like here, I need the joint cost as my first calculation. So which means you go to your C1, you need now the joint cost. The joint cost to be allocated to joint products. So let's see who makes up the joint cost. Let's go to our question and check who makes up the joint cost. So we start from 1.2. There are 7,000 tons at how much? At here. So we're going to have 7,000 tons times 7,300. That's part of the joint cost. These are the purchasing cost of the soybean. So it's going to be 7,000 times 7,300. Then what else makes up the joint cost here? We have the holding cost. It's going to be 160 per ton, which is 7,000 times 160. Okay, let's take those ones, those two for now. Right, so which means we need soybeans purchase. We have 7,000 tons at 7,300. How much are we going to have there? 7,000 times 7,300. 1, 2, 3, 1, 2, 3.
51,100.
1, 2, 3. Is it not 51
Is
million?
it? Oh, 51 million. Yes. 51 million.
51,100,000. Right? Then we say we also have delivery. It's also part of the joint cost. They say it's 160 per ton. And holding cost, so which means it's going to be 7,000 again, times what? Times 160. How much is it going to be?
1,120,000.
1,120,000. Right, so these are the delivery costs. Let's check again who is going to form part of our joint cost. So we took 1.2 and 1.3. We took 1. So we are on 1.5. The soybeans are processed in batches of 35,000 tons per batch. The electricity required per batch is 168 kilowatts for 250 cents per kilowatt. So each batch is going to use, what are they saying there? Each batch is going to use 168 kilowatt hours, and each batch is 35,000 tons. So here we just need how many batches. The first thing is for you to have how many batches. Then you multiply them. Each batch use 168. Then you multiply by 2.50. That's how you come up with your here. Then here on 1.6, they say other variable manufacturing costs excluding electricity, 100 per batch. So I'm also going to use the number of batches that we have here. So let's see how do we do that one. So what is important is to understand. That's why you see even in the exam, they give you 30 minutes to read the question paper, like 15 to 30 minutes. Those 30 minutes, use them to read the paper, because if you don't read the paper, then it's going to be difficult for you when you start answering. When you are reading, don't just read. Read while jotting down your notes. When you are reading, jot down your notes. Like now, your joint cost, you can just be jotting down. This is going to be my joint cost. This is going to be this one. This is going to, so that when you start answering, you already have a hint of what you are going to do. So the processing cost is how much there? They say they have 7,000 tons, these guys, and 35 tons per batch. So which means here we're going to have our number of batches. When we have number of batches, they are going to use 168 kilowatts per batch. Then times 2.50. I think that's how we put it. How much are we going to have there?
84,000 rand.
84,000. So this is going to be 84,000. Then they say other variable manufacturing cost is 100 per batch. So we need other variable manufacturing cost. When you understand your topic, this is not that difficult as we say it. But the only problem, if you don't understand your topic, I'll show you, like now, if you guys are attending the class. I'll show you all the tricks for Mac. Mac is difficult, but once you have the tricks, you find that you will get that the 60% you will get it. So other variable manufacturing cost. So they say other variable manufacturing cost is 100 per batch. So which means you now need your number of batches here divided by 35 times 100. That is going to give you the other variable manufacturing cost. How much is it going to be? It's going to be 7,000 divided by 35 times 100. So we have 200 batches there.
Mm.
So it's going to be 20,000. Am I correct?
Yes. Yes.
Right. So that's other variable manufacturing cost. So let's go again to our question and check what else goes to. Remember, here we're busy focusing on the joint cost. Right. So we are here. Then the standard direct labor rate was 150 per clock hour, but after salary negotiations, the actual rate for September was 4% higher than the budgeted rate. September's actual direct labor hours. So we have 960 hours. We need to adjust this by 4%. Yeah, what else do we need there? That's all. We just need to adjust 150 by 4%. That's the direct labor rate. Then we multiply by the number of hours. That's all what we need there. I don't think there's anything here. Then we'll check the fixed manufacturing overhead cost of 33,000. So let's check these two to our answer sheet. And the other thing is time. I know time is a problem. When you are answering your question in the exam, there is no way you can finish the exam. That one is not possible. I will just say it's impossible. So what you should do, make sure that you select the questions that you understand from the question paper, then answer those ones. My assumption is if you are average student, if you answer like 75% of the question paper or 80, you get your 60, 55 something, you get it, as long as you are an average student. Because if you fight to finish the exam, you will be making a lot of mistakes, and most of the things that you are going to do will be wrong in most cases. Me, when I answered this accounting thing, I don't even worry about finishing. I just open my question paper. Okay, I'll do this question. I'll do this question. The other one I'll just ignore, especially the one that I know requires a lot of time and low and few marks. I'll just ignore it. Then I'll do the ones that I know I'm going to do them fast because I understand them very well. If the time is still available, then I'll just come back and play around that one which confuses me. Then I get my pass. Because at the end, the most important thing is to pass. It's not about how many questions have you answered. So let's look at the direct. There is no way you can finish Mac. There is no way. It's impossible. Right, so direct labor is going to be 960 hours times 150. 150 is going to be adjusted by 4%, so you can put it like 0.4. If you don't understand this, you can just come and say 4% of 150, then you add it. But at our level, we must understand this. Because this one stands for 150. Then the 0.4 now will add the 4%. Right? Then how much are we going to have there?
149,760.
149,760. 760. Right, so that's the direct labor. Then we also have the fixed manufacturing overhead. They say it's how much again? They say 33,000. So there is 33,000 of fixed manufacturing overhead. Right? Let's check if there is anything that goes to fixed manufacturing overheads. So now 1.8, what else do we have to take to fixed manufacturing overhead? I think that's all. Yeah, that's all. Then what else do we need now? We need the total. When we have our total, then we deal with 1.9. So let's first have our total for this fixed for this joint cost. So we start from 51, 100 going down. Okay. So let's have our total so that we can be able to
52,506,760.
52,506 760. Right, what are we going to do now? We have our joint cost. Remember, we want the joint cost to be allocated to the joint product. What are we going to do now from here so that we can have the joint cost to be allocated to the joint product? Anyone with an idea there? What are we going to do here?
We're going to less the hills because it's a byproduct.
Yes, we are going to less less the net realizable value of so we have to less the net realizable value of the wholes, right? So let's just have a small portion. So here we want the net realizable value. So our sales, we need the sales for the house. Let's just go to our question. What's happening there on this one? They say 1.9. They say the house are dried at, so that one is going to be a cost. And there's also a packaging, and there's 4 Rand 25 a kilogram. Do you see another thing is when you are answering your question, always be careful. You see here they changed to kg. All our working from the top with a ton. So now we're dealing with kgs. So which means now when you deal with this, you need to convert everything to kg. Because now the 425 is per kilogram, the 0.75 is per kilogram, the 1 Rand is per kilogram. So everything now needs to be converted to kilograms so that you can be able to find the cost. Right? So it's going to be 4.25. How many kilograms are there for this? You come here at the split off point. At the split off point from this 7,000 ton, the hull is 7%. So which means that's the quantity of the hull that was produced here, 7% of here. Then when we have our 7% of here, we now come here and convert it to kg and multiply by 4 Rand 25. So that's the sales value. Then we less the drying cost and the packaging cost. That's how we are going to answer this one. So which means we just come here. So the sales value is going to be 7,000 tons times 7% times, if you want to convert tons to kg, 1 ton is equal to 1,000 kg, then times 425. How much are we going to have there? Because the 400 is for, is it per kg? Let's just double check the 425. Is per kg.
Yes.
Yeah, so we need to convert those tons to kg. So how much are we going to have on, so which means the first thing is to find how many tons. So it's going to be 7,000 times 7%. So we have 490 tons. Then we convert them to kgs times 1,000, then times 425. I'm getting 1, 2, 3, 1, 2, 2,082,500. I don't know if you guys are getting the same as mine.
Yes, it's the same.
Right, then we less further processing cost. What are the further processing costs here? We have the packaging, we have drying, so the packaging is going to be so the packaging is 1 rand per kg. 1 rand per kg. So it's going to be so they say it's 1 rand per kg. Here we need how many kg. So it's going to be 7,000 times 7% times 1,000 times 1 rand. Times 7%.
290,000.
So this is going to be 490,000 packaging cost. Then drying, it's also 0.75 per kg. So it's still going to be 7,000 times 7% times 1,000 times 0.75. How much are we going to have there?
I get 367,500.
367,500. 367,500. Right. So what is going to be the net realizable value? Then we take out this further processing cost. Then we can have our net realizable value. $1 million 225. Am I correct?
Yes.
Right. So this further processing cost, we are going to subtract them from from our joint cost, total joint cost. So here, let's just put this one and say these are our total joint cost. So we less 1,225,000 to get the joint cost to be allocated. Right, so which means how much is going to be our joint cost to be allocated to the joint products? We subtract and get how much? 51,281,760. Right, so these are the joint costs to be allocated to the joint product. What are we going to do now? We have our joint cost to be allocated to the joint product. So what are we going to do now? Remember, we want to here, the reason why we are having this long calculation is here. We want the joint cost that were allocated to joint products. So which means you should now come here. How do I allocate the joint cost to the joint products? So these guys, they say they are allocating based on the sales value at the split off point. So which means now we need the sales value at the split off point so that we can be able to allocate those joint costs using the sales value at the split off point. Right, so let's look at the sales value at the split off point. So S mu is 75% and S oil is 18%. Then we get our quantities at split off point. Then we go and look at the selling price at split off point. So our S meal at split off point is going to be this 8,256. Then S oil at split off point is going to be 8,600. So we have our information for the sales value at split off point. So that's what we want now. So the next thing that we want now is the sales value at split off point. So we need the sales value at split off point. So we have S mu and S oil. So S mu is 75%. Times, so this one is going to be 7,000 times 18% times the selling price. So these are the sales value. So this one is going to be 8,256. And this one is going to be what? 8,600, am I correct? So we need our sales value so that we can now be able to allocate joint cost to the joint product.
For S-Mail,
yes,
S-Mail, it's 43,344,000.
It's going to be 43,334,000. Then for S oil,
it's 10,836,000.
10,836,000. Right. We have our sales value. Remember, the reason why we need this sales value, this is our method to allocate the joint cost to the joint product. So which means now, and I would always prefer a total here. Let's have a total. Remember, when we allocate, we also use the total. So what is going to be the total for the sales value at split off point? 54, 180. Am I correct? Anyone who calculate them, just correct me so that we don't go with wrong answers. Because once
It's
we one
50, 170, 54, 170.
54, 170.
Yes.
Is it 170?
Yes.
So here it's going to be 54,170,000. So these are the joint costs. This is the sales value at split off point. So when we have the sales value at split off point, what are we going to do now? We share the joint cost using the sales value at split off point. So our now can say joint cost allocated. So the joint cost allocated now, we use the sales value at split off point. So which means S mil is going to have sales value. It's 43,334 over 54,170 times what are the joint costs? The joint cost is 51,281,760. 51 million. So what are the joint costs that goes to S mil? So S oil is going to have 10,836,000 divided by 54,170 times 51,281,760. But what are the ones for S mil? Are we correct here? Is it correct, this thing? Yeah. These are the joint costs. These are the sales value for S mil, and this is the total. Yeah, it's correct. So what are we going to have as our joint cost to be allocated to the joint products? 43.
The first one I get 41 million and 23,500 and
23,000.
41
Yes.
and 23,000, yeah. 514. If you round it,
515.
it's 515. Yes.
515. So these are the joint costs that goes to S mil. Then the one that goes to S soil, we can just subtract now. You can calculate, but you can just subtract now. You can just come and say, these are our joint cost minus this one. Then we get the one that goes to S oil. So which means we're going to say 51, 281, 760 minus 41, I'm getting 10. I don't know if it is the same with you guys here. I'm getting 10 million 258 245. Right. Then this one is 41 023 515. So we are done with this now for the joint cost. So we can go to our answer sheet now and fill in. Do you see how the process is long? How long these things are? So this is a challenge. That's why I was saying you can't finish this exam. It's not possible. So this one, the joint cost here is going to be 41 million for S mill 23 515. Then here it's going to be 10 258 245. We are not going to worry about the total. Total is just 18. Let's worry about the calculations here. Then further processing costs. Who is further processed here? This is what you should look at now. In our further processing cost, you are going to look at who was further processed. Let's check at who was further processed here.
Oil.
Which point is that? 112, yeah, it's 12. So here we're looking at S oil is further refined to improve the flavor and odor of the oil at a cost of 120 per ton. The refining process does not change the weight of the oil. This is something that you should also look at. Sometimes you find in some of the questions here, they will say when S oil is further processed, it's going to lose a weight maybe by 7%. So which means now, when you are selling the further processed S oil, you are not going to use the quantities at split off point. You are now using after you reduce the 7%. That's another key area that you should look at when you are answering a question. But here there was no change. Then they say the selling price per ton of the refined oil was 8,750. We'll take this one. Here we want the further processing cost, which is 120 per ton. So this one is straightforward. We can just do a calculation inside. You can only do calculations outside for something that does not fit into your answer. This one, I think we can do it. It's going to be 120 per ton times 7,000 times 18%. Then this is going to be the further processing of the S oil. It's going to be 7,000 times 18% times 120. 1, 2, 3, 151,000. 151,200. Am I correct? Just double check there. Right, so that's the further processing cost, this one. Then we go to distribution cost. What are they saying about distribution cost? Who is to be distributed here? Distribution cost for S oil is 1.5% of the sales price. What are we going to do here? 1.5% of the sales price. The sales price is 8,750 per ton. So 1.5 of 8,750 by the number of tons that were produced is going to give us the distribution cost. So let's calculate the distribution cost for SO. It's going to be 1.5% times the sales price times am I correct? That's how we should put it. Am I correct? Right? Then it goes and say 7,000 times 18% times 1.5% times 8,750. What are we going to have there is our distribution cost for S oil?
165,375.
165,375. Right. We want also the distribution cost of S meal. So the distribution cost for S meal, you come here now. This is where you use this table. Because there they are saying S meal's distribution is outsourced to wheel distribution. The contract consists of fixed cost and variable cost formula. The September delivery costs are based on the below observations as extracted. So which means we have the one for May, June, July, August. Then we want to base the September based on here. So what we are going to do, we are going to use the high-low method to calculate the variable cost per unit so that we can be able to see the variable cost for September and the fixed cost for September. So when we have our variable cost for September and the fixed cost for September, then those are going to be the distribution costs for SME. So let's use our high-low method. What are we going to do? The highest what? Activity. Am I correct? We start with the highest activity. The highest activity minus the lowest activity. You compare the highest activity and the lowest activity. The highest is this one. The lowest is this one. So the high cost is going to be 164 minus 160,000 over 5,300 minus 5,000. That's the variable cost per unit. Okay, let me just go down so that we can do this one. So this is going to be our, let's put it as our C2. Right, in our C2, we want S meal distribution cost. Right, S meal distribution cost, we are going to use the high-low method. So which means we are going to have the highest selling price minus highest cost minus the lowest cost over the highest activity minus the lowest activity. That's how we determine our variable cost per unit. So it's going to be how much there? Let's just double check the figures here. I forgot the figures. So it's going to be 164, 200 minus 160. Yeah, so that's there. So it's going to be the variable cost. Variable cost is going to be 164, 200 minus 160,000 over 5,300 minus 5,000. What is going to be our variable cost here?
14 rand.
So our variable cost is going to be 14 rand. So we want the fixed cost. So it's going to be y is equal to a plus bx. Then we can have our, this one is the fixed cost. This one is the total cost. Then this one is the variable cost. So y is equal to a plus bx. So our y is 164,000. We want to find the fixed cost here. So the fixed cost is a. So we want to find a here. So it's going to be 164 is equal to a plus bx. It's we use this one, so it's going to be 5,300 times 14. So our 164,200 is equal to a plus how much? So it's 5,300 times 14. One, two, three. It's going to be 74,200. Am I correct? Are we together here on this part? Are we together? Are you guys there? Are we together on this part? I want you to understand this. Because here, what we want from here, we got our variable cost. But remember, we want our fixed cost and our variable cost for September. So here, we want now to determine who is A. A is the fixed cost. If you go to this equation, you find that this is the total cost, this is the fixed cost, and this is the variable cost. Right. So what we want here is to get the A, which is the fixed cost. So which means we are going to say 164,200. If it jumps, it has a positive, and it jumps the equal sign, it's going to minus. So it's going to be 74,200 is equal to A. So our fixed cost is going to be how much there?
90,000.
90,000.
So our fixed cost is going to be 90,000. Right, so this is our fixed cost. So now you now want the cost for September. So this is the fixed cost for September. Then you want the total cost now. So you can also go back to your equation and say y is what we want now is equal to 90,000 plus bx. B is our variable cost, so it's going to be 14 times our x. What were the quantities for S meal in September? So it's now going to be times 7,000 times 75%. So this is going to give you the total cost. It's the total distribution cost. So which means here we want the quantities, then we multiply them by 14, then we add them to 90,000. Then we'll get our total fixed cost. 7,000 times 75% times 14, 73,000
73,500.
plus 90,000. It's going to be 163,500. So this one is 73,500. Then when we add it, so our total cost is now going to be 163,500. So this is going to be our total distribution cost for S meal. I don't know if there's anyone who has a question there, because sometimes you may even find it like this in your questions, which means you need to. So this is going to be for here, 163, 500. Right, then we go to the refining cost. Unless if there's anyone who needs clarity, then we go to refining cost. What is going to be our refining cost there? It's which number? The refining cost. Is it not this one? Is the processing cost? Yeah? Is there any other refining that is there? Are we there? Are we there? Where is the refining cost? Because this one we took it. Remember, we took it. Where did we get the refining cost? Oh, it's here on top. We are refining S oil. That's 120 per ton. Yeah, that's 120 per ton. So S oil is going to be refined at 120 per ton. S oil. So it's going to be 7,000 times 18% times what? 120. How much are we going to have there?
Sorry, aren't we duplicating it with further processing costs?
Sorry?
Are we not duplicating the further processing cost with the refining cost?
Oh, so yeah, that's why I was confused even myself now.
I think we had already taken it into account when we said further processing cost.
Yeah. That's why even myself I was like, where is this coming? So we further process S oil. So which means this line is not there. We have already, because this is the
Taken it
refining
into account.
cost. Yeah, thank you. That's why I was like, so what are we left with? The fixed admin cost only. So let's check on the fixed admin. What are they saying about them? We're almost done with this one. The fixed admin is
360,000.
which must be shared equally between the joint products. Am I correct? So that one is going to be fixed admin is going to be 360,000 divided by 2. Is it not 180 for everyone? It's 180,000. 180,000 here. Right? So which means now, oh, we don't have the sales. What is the sales for S meal? It's going to be 7,000 times 75 times, this one is going to be sold at split off point. Am I correct? The selling price for S meal. S meal is sold at split point off point at 82.56. Then the other one is going to be, this one is 8,256. Then the other one is sold 8,750. Right, so that's the selling prices, the sales. So which means this one is going to be times 8,250. Then we have 7,000 times 18% times 8,750. So these are the selling price. How much are we going to have for S meal? So S meal is going to be how much is going to be for S meal is 43. This one we did it before. It's going to be 43,334. Then let's do for S oil, which is 7,000 times 18 times 8,750. Are you guys there? Is there anything confusing now? So this one is going to be 1, 2, 3, 1, 2, 3. It's going to be 11 million and 25,000. Right. So that's the sales. So we can now less the joint cost from the sales value of, so here you can always put your, if you don't want to put your total, if you want to less them from here, you can put your brackets here. So what is going to be our profit for the year? We just less from the top. Someone can just less the other column, and someone can just less the other column there. Then we have our final answers. It's going to be minus. Okay, how much do you guys have for S meal profit for the year? I got 1, 2, 3, 1,966,985. Anyone who got for S oil? Minus 10. Are you guys still there? What's happening? Minus 151. One 65, 3. So here we have how much here? 1, 2, 3 is 270,180. Right, so we'll be done with this question. It was supposed to have, right, so we're done with this one. Any question before, I want us to look at something before we close the class. I want us to quickly look at another question. Anyone with a question before we look at another? part. Is it a part? I want us to look at a part. Anyone with a question? Are we fine? Are you guys there? Are we fine?
Yes, we are fine.
When people are quiet, I feel like they are not fine. Right. I want us to look at this other one. I want you guys to, now we've done that one together. Let's come to this part B. Let me share part B. Let me share my part. Part B is going to test your understanding of the topic that we were doing. So let's look at part B together and see how you guys understand what we have been doing together. So on part B, they say, during the PD strategic planning session, the management team considered expanding its operation by processing some of the S-meal into textured soil protein, that is the TSP. TSP is used as a meat extender and can be added to food to increase its protein content. There are several well-known suppliers already in the TSP market. The operation manager provided the following working paper and the related information. Further processing working paper. Who did this one? This was done by the operation manager. Then this is the further. This is what the guy did. There is going to be a cell of S-meal at split off point and further processing S-meal into TSP. So these are the working paper which the guy did. He has cells, allocated joint cost, distribution cost, further processing cost, new equipment. And if you check in your question, in our question, let's go to our question. The question says, critically evaluate the further processing working paper. Critically evaluate. This is just like you are marking. You are marking what was done by the other guy. When you critically evaluate, it means you are marking. In your critical evaluation, you must focus on the application of the relevant costing principles, indicate and provide a reason why you disagree with each amount, review all the information, working for errors and omission, and where applicable, provide correct workings. Right, so what we want to do is to critically examine or evaluate what was done here. So which means what we are, when you have this kind of a question in your exam, this kind of a question demands your understanding of the topic. When you are critically evaluating, which means you have to have a thorough understanding of the topic. Right. I want us to, when you have this kind of a question, like this guy did this already. So what I'm going to do is you start one by one, calculating using your understanding and see if this is correct. Based on your understanding of how cells at split off point of S-meal are going to be calculated, you calculate. Based on your understanding of how cells of TPS after further processing, then you calculate. If you get this, then you say it's correct. If it is not, then you say it's incorrect. Then you give the correct calculation. If the answer is correct, then you don't need to, you just point out that it's correct. But if it is wrong, you now give the correct calculation. Right, I think that's how we answer this kind of a question. So in our cells, let's go here. 94,500 tons of S meal will be converted into TSP during the 5-year period. During the 5-year period. You see, the period is for 5 years. Then, so which means during the 5-year period, they are going to convert 94,500 tons of S meal. Then they go and say the further processing of S meal will result in a normal loss that occurs at the end of the process. So you see, when we do a further processing, there's going to be a normal loss. So which means at the end of the process, when you further process S meal, you no longer have 94,500. You have to minus the 5%, the normal loss. Right? Then they say the expected selling price for S meal is, and for TPS. So let's start with the sales. Let's recalculate the sales for S meal. Are they correct there? Do we have the correct sales for S meal? Are you guys there? Are we still together here? Which means here you are going to answer your question based on so you are going to say in your B, you are evaluating what are you going to say with the sales for S meal? The sales for S meal is correct. If you multiply if you multiply 94,500 times the selling price, you'll get this amount, 756,000. 756 million. Why am I getting a thousand on myself? On my calculator, 756. Okay. Okay, it's 756 million. So which means this 756 million is correct. So you go and say the sales at so which means in your working paper, you are now going to say S meal sales at split off point so this one is going to be correct. S meal sales at split off point is correct. So let's look at the sales for TSP after being further processed. Is it correct? 1,134,000, which means you look at your calculation. The selling price is 12,000, but you must look at here, further processing is 5% normal loss. So which means we no longer have these tons. So let's calculate that one and see if it is correct. So it's going to be 94,500 times 95%, then times 12,000. Is it correct? Are you guys getting the correct further process into TSP cells? Huh?
The amount is incorrect, that one.
Yeah, it's incorrect. So which means what you do now is 1,134,000. So you just come here at your B at your cells for TPS. So you just say TPS sales sales value of 1 million. It's 1 million and what there? It's 1 million and 134,000 of 1 million. One million 134. Okay. 1,134,000. TPS sales value of 1,134,000 is incorrect, right? Then you just come here and say the correct sales value is, oh, they say, are we not supposed to provide reasons, relevant information, working areas, provide focus on the applicant, indicate whether, yeah, so we should also point out the sales value did not include the normal loss. So you now come and give us the correct one. The correct sales value is, then you give us a calculation. So which means it's going to be 94,500 times, no, you reduce the normal loss times 12,000, which is equal to one. I'm getting here 1, 2, 3, 1, 2.
1,077,300.
Yeah, that's what I'm having here. It's 1,077,300,000. So you are done with yourselves. You are done there. Then you go now to your allocated joint cost. Right. You check what's happening on the joint cost. The expected, okay, the further processing, the joint cost allocated to the S-mill input is expected to be 12.4 million annually. So S-mill is the one that goes into the process. This one will just go to further processing. So how much are the joint costs that goes into S-mill here? 12.4 annually. Remember, this is a 5-year period. So which means it's 12,400,000 times 5. 12,400,000 times 5. Is it correct, the one that was provided there?
Yes.
Yes, it's correct.
Okay, it's correct. Yes, that one is correct. So we just come here and say, joint cost allocated to S-mill right? Then we are done there on the joint cost. Then you go now and look at distribution cost. What are they saying about the distribution cost? The distribution cost for both S-mill and TPS will be 105 a ton sold. Let's start with the distribution cost for S meal. It's 105 per ton. How many tons of S meal were sold? It's 94,500. So it's going to be 94,500 times 105. Is it correct? Do we have the correct figure? 1, 2, 3, 1, 2, 3. 9,922,500. Do you guys have the correct figure? Was here just going to say 94,500 times 105. Is it correct?
Yes, it's correct.
So the distribution cost allocated to the distribution cost to S meal is correct. So this is how we will be answering your questions. So distribution cost allocated to right. So let's go to the distribution cost allocated to TSP. So TSP is also going to have 105 per ton. What are we going to do? Is it going to be the same? Here, the trick is here. Your TSP, when you sell it, it's no more 94,500. You have to deduct the normal loss. So which means your TSP is now going to be 94,500 times 95% times 105. So that's the T. So let's check if it is correct. 94,500 times 95% times 105. Is it correct? They say it's oh, they just give the same. So this is incorrect. Am I right? Because they take into account, they work it as if there was no normal loss. So which means in your answer now, you just come here and say, so understanding your topic, that's why I always say, if you understand your topics, you find that most of the things are not going to confuse you much, as long as you understand the principle behind the topic. So your distribution cost allocated to S meal is correct. Then distribution cost to TSP is incorrect. Remember, they want a reason. Is incorrect. They did not deduct normal loss from right. So the correct distribution, wherever there is a wrong answer, you should give the correct. The correct distribution is then you do your calculation, which is 94,500 times 95% times 105, which is equal to 94, 1, 2, 3, 9 million, sorry, 9,426,375. Then you are done with that one. So this is how you correct. Correcting demands your understanding of the topic even more, because you are correcting something that was done by somebody. So let's look at distribution costs were done. Let's look at further processing cost. Who was further processed here? The cost of processing S meal into TSP will be 1,150 per ton. What are we going to do here? S meal is going to be processed into is going to be 1,950,000. So what is going to be our answer there? Is it correct? So how do we calculate the cost of processing S meal into TSP? Will be 1,150 per ton. Then these guys, they say it's 184,275. So what are we going to do with the normal loss here? I think that's the only thing that is needed there. The normal loss. What are we going to do with the normal loss? Anyone with an idea there? What are we going to do with the normal loss?
Deduct normal loss. Just guessing.
Yeah. Are we going to deduct the normal loss here? No, because when we put it into the process, it's still 94,500. We only deduct the normal loss when we want to use the figure after the process. So which means here we're going to say 1,950 times 94,500. Because this 94,500 is what we put into the process, which means it's at this cost per ton. But when we are done with the process now, anything after the process is where the normal loss, because here you should check it. That's why these guys, they underline that occurs at the end of the process, which means when we cost, the processing cost is going to be costing these quantities, 94,500 tons. I'm sure that's how we should put it. So how much is it going to be if we multiply by 94,500 times 1,950? It's going to be what? 184. So which means this figure is correct.
Yes.
Yeah, it's correct. But you guys, you understand what I'm trying to. This is just something that when you are in the exam, it's not something that I say is always like this. This is you who will just say, okay, further processing of S meal into TSP, which means when you here the normal loss will occur at the end of the process. So which means here you are going to feed into the process 94,500. So when you cost the cost of the process, it means you are costing based on 94,500 tons. This is something that when you are in the exam, you just figure out yourself. It's not something that we always come across, or we can say there's a theory for that, right? Then they come here and say the process, I always want to work on this line. New equipment What is going to happen to the equipment? They say the process would require an investment of 45 million in equipment, which is depreciated in full over the useful life, the 5-year useful life. What I'm going to do here, you are now applying your relevant costing. Is it relevant to TSP, the cost of 45 million in equipment? You are now applying your relevant cost understanding. So the cost of the new equipment is relevant to TSP. It's relevant. So which means the 45 which was deducted here is correct. So that's what you are going to say in your answer. So you just come here and say, so which means we're here. New equipment of 45 million is relevant So this is going to be correct, okay? Right, so we're done this. So what we tested here is your understanding of relevant cost. But then let's look at the last one there. I think we're almost there. Let's look at the last one there. The last one is, we should always look at the working paper. Depreciation. Let's look at what they say about depreciation. The process would require an investment of 45 million in equipment, which is depreciated in full over the 5-year useful life. So which means we're going to say 45 million divided by what? By 5. 1, 2, 3, 1, 2, 3. So it's going to be 9 million. Is correct, the figure, but is it relevant? Depreciation, that's another thing. The figure is correct. The calculation for depreciation is correct. But is depreciation relevant? Is it
No.
relevant?
No.
It's a what?
No, I think it's not relevant because
should
the
keep-
machine is still gonna depreciate even if there's a further process or not.
Okay. So we're gonna say the calculation for depreciation is correct. The calculation itself is correct, but depreciation should not be, depreciation is not a cash flow. That's the word that I wanted you guys to put. It's not a cash flow and is not relevant. It's not a relevant cost. Let me just put it. It's not a cash flow depreciation. Remember, when we're doing our relevant costing, depreciation is a non-cash flow item. So it's not relevant for decision making. Remember, relevant costing is for decision making. So if something is not cash flow, then you cannot use it for decision making. That man, that is not going to affect the cash flow itself. Remember, when we do cash flow, we're talking of the movement of real money here. We're not talking of things like depreciation where there is no real money. I think you guys, when we were doing your cash flow, you could see how we treat depreciation. We used to call it a non-cash item. Then we add it back to the profit that was calculated. So the same applies here, right? I think we are done, but I want you guys to, for today, it was just a warm-up. We're done. I want you guys to, let me just go to where I want us to do. Let me just check. There's something that is important in here that we didn't do on part A, just because of time. Let me just I want you guys to check on this question in part A. Then we just go to on part A. There's B here. It's also important. I want you guys, if you don't have a textbook, you can use our notes. Draft a memo to the PD's management team where you briefly discuss whether the three other methods of allocating joint cost to the joint products are suitable. I want you guys to check in our notes the three other methods, which means they are talking of what was not mentioned here. So the remaining three is the one that we have to discuss here. So which means we are going to discuss about the physical method, the net realizable value, and the gross profit percentage. So I want you to check and then try to see, are they suitable for what the information that we have here. When you are doing that answering, what you just check, if you are going to use the net realizable value, is it suitable here? Remember, the net realizable value is after further processing. Then you should look at, was there a further processing that was done in the product? Then if it was there, then the net realizable value can be applied here. Just like that, when you go to the physical quantity, you also look at your selling price and those quantities. And then when you go to the gross profit, but I think I'll also discuss, because this is one of the questions that we can come across. I saw it in our Mac3761. I don't remember which test was it, where this question was there. I don't remember the test. So we should understand how the suitability of these into our joint cost allocation. Right. So which means in our next class, I want us to look, you guys, you should look at your part C and D and E. Then when we are done there now, we can now go to our real Mac 3761 question paper. Remember, I said the reason why I want you guys to focus on this, these are basic costing principles. So I want us to understand the basic costing principles before we go into the bigger picture. Remember, the bigger picture is the Mac questions, the 3761 questioning style. Then we go there with an understanding of the basic principles. Because if you go there confused with the basic principles, and you can even see the questioning itself is confusing as well. So if you are confused with both two, the questioning and the basic principles, there is going to be a serious problem. So let's go there, at least after brushing up with our basic costing. Then when we get vexed with the question, because there the question in, if you check, you guys, if you check when you were writing your test 4, there's this fun question to me. It was number C. If you are not wise enough, you could not tell what is needed on number C. Go and check your test 4 number C and see what was the wording of the question. Then you will see that in Mac 3761, you need to understand the topics very well, and then be careful on the wording of the questions. Right? So for today, we are done. Then we'll meet for this module again on Wednesday. I think next week we should be done with this posting thing. Then we can go into MAC 3761 question paper. The reason why I want you guys to, I would prefer, even when you are doing your own study, if you can have access to Mac 3701, get a Mac 3701 and Mac 3702 for basic principles. Why? Because your Mac 3761 does not cover the full syllabus. So if you focus more on Mac 3761 question papers, you are not covering the full syllabus. You are not covering the full syllabus. So if you can get yourself, because Mac 3701 question paper, it covers at least 70 or 80% of the syllabus. The same applies to 3702. Even though the questions are a bit light, but they will give you the understanding of the application of the basic principles. Right? Unless if there is anyone with a question, I think we can close today's class.
Okay, I think I have a question, but
Yeah.
I think it's not relevant. It's just relevant to the way they are marking the script. So, for example, based on part A that we were doing now,
Yes.
if maybe it happened that I just make, you can go up just. Maybe for example, there on the allocation here, you see on the soil, maybe I happen that I use 887, I think it's 87 something.
Okay, instead of 8,600.
Yes, I use that one. Ne? And then it means that now my answers, they are almost gonna be incorrect. But maybe just that I use the incorrect amount here. So my question is that I don't know how they mark. So are they going, but I follow the structure correctly from there. I follow everything in a correct way. However, I just use the incorrect amount there. Or maybe somewhere again, I put another incorrect amount. But the structure, I follow the same sequence and everything. So it means that are they going to give me wrong?
You know, when people are marking, if your script is marked by someone, remember the problem that we have when it comes to marking is the main problem that we have when it comes to marking, that I always see is a problem, is